Welcome to another video. If you're new to the channel, I'm a top author on the TradingView platform as well as running an educational program and swing trading full-time with my students. What we will be speaking about in this video is how you're supposed to be backtesting your trading strategy that, as you know, is of key importance if you want to become a consistent trader and develop a profitable strategy. So without further ado, I will invite you to go and check out the video until the end because it will be filled with value. Backtesting a trading strategy is probably one of the most important things that you will ever have to do when it comes to actually developing a strategy that works and being sure that you actually have an edge in the market to be always consistently profitable. But most strategies that are effective, specifically swing trading strategies, but also day trading strategies, are most effective if they are using multi-time frame analysis. And how is the best way to actually backtest a multi-time frame analysis strategy and record that data, and most importantly build your statistical data that you can refer to when you're actually live trading? Well, that is exactly what we will be speaking about in this video. Okay, so let's speak about backtesting a trading strategy. So first of all, okay, it depends if you're backtesting a multi-time frame trading strategy or a single time frame trading strategy. Obviously the approach will be different. Now, if we're speaking about a single time frame trading strategy, then obviously everything is easier, right? You have only one time frame, so you will be testing everything on that single time frame. But if you're trading a multi-time frame analysis strategy, as I suggest, obviously the testing is a little bit more difficult, but is obviously something still pretty easy to do and key to actually do. Now, let's just for example, okay, just because I want to show you how to actually do it, let's take a very simple trading strategy. Okay, the rules will be extremely simple. It doesn't really matter. It's just for example. Okay, let's say that you have a strategy that is based on the daily time frame. I want to see what kind of trend I have on the daily time frame. So if the market is creating lower lows, I'm in a bearish trend. If the market is creating higher highs, then I am in a bullish trend, and I will be only trading in that direction, and I will be taking my entry as soon as the market hits the 0.382 Fibonacci retracement with a stop above the 0.786 Fibonacci retracement, and I will go risk-free as soon as the market creates a lower low on the 4-hour time frame. So just a very, very basic strategy that obviously I don't suggest you to trade, but it's just for this example. Then obviously when we trade, we also use CLT data, see what kind of what hedge funds are actually doing. It's much more elaborated, but I just want to, for an example, I just in my head just wanted one simple example that I could make as a strategy, and this one is the first one that came up in my mind. So how you will be doing it. Now, first of all, this probably you all know it, what it is TradingView. Okay, the software is the platform is TradingView, and what we will be using is the TradingView replay tool. Okay, so when you're using the TradingView replay tool, basically what you can do, you can just click and you are able to replay both what is happening on the daily time frame and obviously also lower time frames. So for example, what do we have here? Now the market is currently in a bearish trend, right? And our rules of this example strategy are that if the market is creating lower lows and lower highs, and since the market here is creating lower lows and lower highs, we will be looking only at sell setups, and we will be taking our sell setups on the 4-hour time frame every time that the market retraces to the 382 Fibonacci retracement. So we will go down on the 4 hours, we will be taking our Fibonacci from the high to the low of the impulse as soon as the market starts the retracement. Perfect. So we will be taking our short positions at exactly 382, and as we said, the stop loss will be above the 78.6, and we don't have a take profit. Okay, we just let the trades run and trail our stop loss. So let's see what if we actually get triggered. Just a quick reminder, make sure you comment below and you let me know which topics you would like me to cover in the next video. Okay, so in this case, okay, we have to adjust our Fibonacci. and obviously the entry now becomes here. Now this is obviously a very bad strategy. I'm just for the example to show you how to backtest. So at the moment we got triggered, at the moment we are running in good profits. The market, let's see what the market does. Okay, so the market, it currently just broke to the downside. So what do? We move our stop loss to break even, okay? So we move our risk-free, we go risk-free. So we move our stop loss from here to 1 pip below the entry price just to protect our trade, okay? Then what happens? Let's see what will happen next. We don't have a take profit and we will just trail our stop loss. Perfect. Now the market created a new high, so we can trail our stop loss above that high. Let's see what will happen next. The market created another high. We can trail again our stop loss above this level. Now, obviously, when the market created this high here, we trailed our stop loss here. And when the market created this wick here, we are out of the trade. So obviously, what this ended up being is a 1 to 2.4 risk to reward. It means that if we risked 100 euros, we made 248 euros. So this is basically what we had. Now we had a winning trade. How are we supposed to keep track of their backtesting? Obviously now we only backtested one trade, but you can apply this over and over again on a very high number of trades. And I suggest you do at least 300, okay, before even start to considering if the strategy actually works or not. But what do? You can just go, you can create a spreadsheet and say, okay, the pair, the risk to reward, the outcome, and a screenshot of the trade. Okay, so a Euro USD, a long, 1 to 2.4 risk to reward, a closed in profit, and a screenshot. Okay, it doesn't really matter. The important thing is that you record risk to reward and you have a screenshot and the outcome of the trade. These are the three main things that you have to put in a spreadsheet. Now, obviously, this is the COT report, and it's basically what hedge funds do in the market. So it has nothing to do with the example, but it's just to tell you that you use a simple spreadsheet and you put Euro USD, 1 to 2.4 risk to reward, win, and the screenshot. End of story. This is everything you have to record. You do this for 300 times, and then you just have the statistical data for your actual strategy. So continuing to going, what will you do? Now, what did you just realize here? Okay, the market created a lower low. So we are still in a bearish trend. So we will still be looking for potential sell setups. So going on the 4-hour time frame, we just keep going, okay? At the moment, we don't have an impulse to the downside, so there is no way we are not interested, right, in longs, because we said that from the daily time frame, we're only interested in shorts, since the trend on the daily time frame is a bearish trend. So let's see if things will change. Okay, so now the market just created a nice impulse to the downside, right? And we said that we're only interested in possible short opportunities from the daily time frame. So let's see if we will get a retracement here on the 4 hours that will give us the opportunity to take another trade according our example strategy. So as we just said, what we will be doing, taking a Fibonacci from the high to the low, and we will be shorting basically the 382 Fibonacci retracement, which in this case, the same candle that started the retracement actually triggered. So we took another short. Now, as we just said, for this example strategy, we don't have a take profit, so we just let the trade run. Let's see how this one will end up. So the market just created a lower low, so we go risk-free on the trade, meaning that now our stop loss is below the entry, so we can only make money on the trade. Let's see how this will continue. Perfect. Now we just trail our stop loss here. Okay, now we just trail our stop loss here. Okay, so now obviously after the market made this minor retracement push to the downside, we trailed our stop loss here, and we were stopped out of the trade for a 1 to 3.25 risk reward, meaning that if we risked $100, we made $325. So now we have another trade. We have to go in our spreadsheet, and again, we will say Euro USD, the risk to reward, the outcome, and we will put the screenshot of the trade. Very simple. Then we just continue to do it, and you continue to do this over and over again. At least you have it until you have at least 300 trades. And at that point, what you can do, you can look at your data and you can say, okay, this strategy works. It has a good risk to reward. It has a certain win rate that you can calculate. and you can calculate everything on the strategy, and you know how the strategy performs in the past. Then is the point to go in live market situation and actually live trade the strategy with a demo account to see if you can replicate what you have seen in your backtesting in live market situation. And only at that point you can actually go, if it worked, you can go and trade the strategy with live money and with real money. And at that point, what do? The more money you will put in, the more you will actually make. So at that point, you put as much money as possible in your account, because you will make, it's a game of percentage, right? The more you put, the more you make. So at that point, you put as much as possible. I hope this video actually helped. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more education and analysis for all of you, as well as going and checking out the mentorship program. You find the link in the description. It's a very complete program. You first get all the rules of my strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how you're supposed to be applying the strategy with entry, stop, take profit, as well as having me answering every question that you have each and every day. So I will invite you to go and check it out, or go and check out the next video.